Good morning and welcome back to another session of weekly review of Indian equity markets. We have had another uh, solid week for the month. Solid week uh, when Nifty posted a gain of close to 1.4%, 1.15%. And if you see the structure of the Nifty, we are having another breakout of this flag structure. So last week when we were reviewing the market, the daily candles were expanding slightly on the lower side as compared to what we had seen on the positive side. So the buyers' ability to take the prices upward diminishing, whereas the sellers were kind of getting slightly more comfortable in terms of their ability to take the prices down, or at least they were able to print a wide range candle with similar amount of effort as much as when compared to the buyers. Now, this week, if you see on a daily candle, the texture of the market actually didn't change till Friday. So if you see, we started the week with a downward push, then it was followed by another day of you know another day of candle which was while still within the mother candle which got printed on Monday. But the texture of the candle was negative. There's a clear wick which is visible. But then what happened on Wednesday uh, gave some bit of solace to the market, and then on Wednesday we made a decent long tail candle followed by another narrow range candle on the negative side on Thursday, which was also expiry day. But then Friday, things just changed right from the word go. Uh, I think a large part of this is contributed by IT services because that has got significant weight in the market. So Nifty IT was up close to 5% on Friday as the as the results started pouring in with top two top two top two index weight in IT, which is Infosys and TCS, had declared their results, and results uh, were considered to be positive, given that there was some bit of expansion, or at least the deceleration was not visible. So that's where we saw nice wide range candle getting printed on Nifty as well. Now, when you look at this and compare this with Bank Nifty, the story of Bank Nifty is slightly different. But while Bank Nifty has also got into positive territory, I think there's some bit of rub-off effect there. But the fact is, apart from IT, we also saw a couple of large caps also kind of helping the index to move higher. I'll show you that specific candle in specific security as well. If you see, the texture of the market continues to remain ultra positive, and if you see, there are hardly any down days in the market. All that you see are quick positive up move in the market, and the stance remains cautious, more so in case of mid, small, and micro cap space where the rally has been overextended with hardly any correction on any given day, barring one or two wide range candles which got printed once in a while. But overall, we are seeing a much strong and extended rally. Now look at this kind of rally. There's a 10% rally with hardly any correction which has played out till now. So, and if you see, we've kind of marked out the levels last week. So this was a previous high. Now Nifty has made another high. So clearly we are printing a higher high, and also this is a higher low. So things remain positive. Not sure as to how long things will continue to remain positive, but the fact is things continue to remain fairly positive as far as the market is concerned. The word of caution comes in from mid, micro, and small cap space. That is where the pocket of exuberance is. Now let's look at what has happened to the Bank Nifty over the course of the week. So this is what Bank Nifty looks like. So while Nifty we saw has printed a all-time high, another ATH candle, whereas in case of Bank Nifty we still continue to remain within the range. One good thing, one thing that we were noticing in Bank Nifty is that last week when we were talking about Bank Nifty, we said Bank Nifty has printed a uh, lower high, but higher low till such time. And then as this week progressed, we again came very close to the level of very close to the range of testing out this uh, the lows which got printed 3 4 weeks back, and then we moved up with a lot of energy. Now, if we turn this into daily candle, now this is how the daily candles look like. And again, as we had spoken a couple of days back or last week, right, the wide range candles are predominantly getting printed on the lower side. So at this point of time, it will make a lot of sense to kind of be aware of the situation and be cautious here, rather than trying to call the direction of the market either on the upside or downside. But clearly, this is the range with which I would like to work. So this is a range formation which is happening in Bank Nifty. If we were to take out this once again, we don't know where we are heading to, right? But again, this is a very strong bullish up move in the market, and 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 it looks like the entire world wants to join the India party. Bank Nifty is up 6.5% as compared to 10% in case of Nifty. I think we were tracking Bank Nifty. We were positive on Bank Nifty here, and then this wide range candle got printed, and then it just kept moving higher. So similar action is happening in IT. Now let's look at what is happening in IT. Last week when we were talking about IT, this was the texture of IT. We were consolidating within the flag structure. Now, in one quick fire move, we've just taken the flag out and closed at the highest point of the day. This is phenomenal move in the market. So what do we make out from here? So IT, we continued to remain bullish. We were positive. We kept building position here. We kept building position sometime here, someplace here. I think this was another place where one could have kind of gone really aggressive on Nifty IT. I think I missed out this adding more here, but this was definitely a place where one should have confidently added a lot more position into, or added on to the position, and that could have given a 15-20% move is significant move. So I think a couple of folks continued to add as there was correction happening, and this is again a valid point where one could have kind of possibly thought of taking some bit of aggressive action, given that there is a flag consolidation happening. And this is the place where we also kind of noticed last week, and we were talking about the flag structure, and then in one fire move it's just taken out the flag structure. So I think we are definitely heading higher, and if things were to play out the way it has played out in other indices, then I think sooner than later we are going to make a all-time high in Nifty IT, and that's going to add a lot more legs to the market in terms of Nifty move, rather than any other indices in the market. So broadly, this is the structure of IT. It remains very positive. We are yet to see results coming out of other stocks. So top three IT companies have declared their results, which is your uh, TCS, Infi, and HCL as well. Now, what's left? What the other pockets of IT stocks are yet to come out with results, but that is where very interesting and exciting action can happen, because in case of IT services, the mid and small caps have a lot more firepower, and the way they can move is very different, or the structure they follow is very different than what you see in large cap structure. So overall, I think we remain very positive. This is the structure of Nifty 500. So another flag breakout here, and then we are heading higher. So these are phenomenal moves. These moves are something which kind of can put can put a lot of pressure on people who are outside the market to kind of come and participate in the market. But let me reiterate, this is not the place to get aggressive and try and build position. What can happen? I think there's no reason why a market cannot correct 10-15% within a bull market, and so wait for the correction to happen and then start pouring in more money. So broadly, that's how I see the structure of at least the broad-based indices. Within the broad-based index, you know, Nifty Financial Services consolidating. The structure is very similar to what we have seen in Bank Nifty. FMCG is one pocket which continued to move higher. The structure was good. This was the breakout zone. Let me just drag this here. So this is the breakout region. There is no reason why Nifty FMCG will not consolidate, or it may consolidate. It may continue to consolidate in this region for some time and easily form this. And then we may have one day when the FMCG can kind of move higher. So what do we do from in such kind of position? So just think of what happened in IT, and were we able to kind of take full full potential, or were we able to utilize some bit of correction which was happening in IT? The answer is something that you'll have to think about. And if you were to be in you want to build long term position in FMCG, I think these correction, this 2.5% kind of correction will is a good opportunity for you to build some positions here, let it rotate here, and then go up. What would happen is essentially, if this were to go, then you cut your positions, and can the test of this place happen? Actual pivot is here. So, so in case of a bad market, the correction can be as steep. Now let's look at the percentage wise correction from where we are today. I think 10% correction is not an improbable option. You look at this correction, it was close to 7.5% correction. So I think from a structure perspective, FMCG is definitely offering a slightly better margin of safety as compared to a lot of other large cap sectors which have continued to see significant up move. The case in point being, infra. These are extended rallies. So broadly, if I were to say FMCG structure looks something like this, this can happen and then move higher. Whereas in case of infra, it has already moved higher. And look at these 2.5% kind of moves on a weekly, monthly basis on weekly chart. So I'm not trying to find fault here, but the fact is these are super extended rallies. These rallies can have sharp downward correction. So mid cap, we've seen some bit of pullback before it went higher, but there's no element of consolidation, no element of barring this shakeout candle. There's no other element of smaller move, a move which can give you opportunity to enter into the market or enter into these structures. Services sector is doing well. If you see the consolidation which happened, we were continuously tracking the structure. We have moved higher with good positive strong candles, and then we continue to remain elevated, and we printed a higher high. Nifty Junior is again doing exceptionally well. Healthcare is one pocket which gave a couple of opportunities. There was an opportunity here to add. There was an opportunity here 2 weeks back to add. Uh, so 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 again, healthcare is in an extended structure. If I were to kind of try and extrapolate the probability of what can happen in healthcare, so this is a 30% move from April. That's going to be wonderful, but it's not going to happen in one shot. I'd be very surprised if we see something like this. But you don't know the kind of money which is coming into India. I think anything is possible. Now, consumption is another theme which is again in a strong upward move. So I think overall, if you look at the broad Indian markets, the structure remains very positive. It is kind of moving with a lot of positive energy, and it's moving from strength to strength. Sorry. So these are not places to get over aggressive and start building position in you know in a state of you know lesser control, if I were to say so. One needs to have more self control and discipline at this point of time, because while it looks like the opportunity miss, but you can't get hold of every opportunity, you can't get hold of every cycle the way you can't chase a stock from right from the bottom to the top. And that's something which is important to understand. By most of the indices, trend pivots are far away, moving averages are far away. If I were to kind of place moving averages in weekly moving average in these kind of structures. So 30-week moving average. Let me just hide this. So let's start with IT. 30-week moving average started moving higher, and it would have and look at the way place at which it kind of took support. It took support right at 30-day moving average, and this definitely was a good opportunity to add more to your positions. And we're talking about another 17-18% move from here. So this was one phenomenal opportunity that possibly knocked at our doors not very long back. Let's look at Nifty. Let's look at 500 Bank Nifty. This is what I was talking about in terms of extension of the rally. We are 20% away from 30-day moving average. Look at the way. Can you find something like this in the recent past? The answer is this was the place. This was another breakout phase. And then we moved 40% higher. And this was a election post-election result rally, and we just kept moving higher. In a couple of weeks time the rally just got. So this is an interesting stat. If you see, we've gone back into history, and we've just noticed that this 20-22% is one of the most is the possibly highest extension as from its 30-day moving average. That's a interesting point that even I'm making it right now. So I think it's plain simple extended rally which continues to discount the fact that current government is coming back, and they are going to continue to remain as focused about their infra development story that they have spoken about. Now this is something which the entire market has kind of plugged in, and and this if some negative news flow were to come, we may have a very sharp pullback, and one has to be prepared for such kind of sharp pullbacks because this is not a simple easy market to work with. This is definitely extension in rallies, and this would be the case with almost every other stock and every other sector. So broadly, if you were to look at Indian indices, I think almost every other sector, apart from IT, which is showing very strong move, and the reason for the move is the fact that markets want to kind of start looking at IT services once again, as the result season gives them enough confidence that there is a possibility that Indian IT sector would start looking at higher revenues, and revenue transformation would once again start showing on the positive side, and there is a high probability that the and there's a high probability that margin expansion would once again show up. Now let's look at a couple of key indicators that we typically track. Let's start with gold. Now gold is in a continuous contraction pattern, and the contraction looks very good. If the gold were to take out this level and start moving higher, it's definitely going to be very positive for the market. uh, Nikkei is another market which is in a very different environment. Last 6 months, Japanese market is one of the best performing market. uh, this is SPX, this is global 600 stocks of Europe. Let's not go to this place immediately. Let's look at what is happening with the oil, kind of as we kind of noticed last week that we are forming a nice, beautiful contraction pattern, and and slightly below the moving average, 30-week moving average, but we are still consolidating there. A break above 30-week moving average can definitely cause some bit of pain, and there's no reason why it cannot happen given the fact that there's so much of geopolitical tension playing out in the oil heavy region, which is your transportation channel, has taken a hit. Chinese markets continue to remain very uh, weak, and we continue to see a down move in Chinese market. We are now at the same levels as we had seen many years back. Uh, this is DXY, which is your dollar strength. Let's look at US market. So Nasdaq for the week has printed a 3.5% candle. Let's look at Dow, which has printed a 0.3% candle, and SPX, S&P 500, has printed a 1.5% candle. So overall, US market health continues to improve, and we are seeing a significant sharp correction, sharp up move in US markets as well. So now within this, the major reason for US markets and starting to do well is the fact that the 10-year benchmark yield, or the expectation of inflation, slowly but surely is kind of got negated, or inflation is moving down, and the possibility of rate cuts on a daily basis continues to move higher. Second. So this is 10-year bond yield, which is closed the week lower by 2%. Uh, After a up move of close to 5%, we've moved lower, and this is what we possibly envisaged last week. That there's a possibility that given that if there were to be some bit of negative surprise on the slowdown in interest rate cut cycle, then we would slightly move trend higher, give back all some part of this gain, and then start heading lower. This is where the support has become resistance. So let's see. It's early to call, but yeah, there's definitely positive sentiment building across the world as far as interest rates are concerned. So this is US 10-year benchmark yield in India is heading lower. This is contracting, and this gives you huge opportunity again in Indian markets to kind of try and see how you can capture the downward move in Indian markets. So now let me try and show to you what has happened given that we've got into result season and quarter three results are out. Okay, before we move into results, I definitely wanted to show you a chart of Reliance because this big boy is breaking out now. So this is what I was talking about. This is a stock which has broken out, and it is broken out with solid strength and a 5% up move for the week. This is definitely adding its weight to the overall markets up move, and one should continue to remain focused about what is happening in this area. And this is something that I wanted to show you. Let me also try and bring across the results dashboard. So as you can see, results dashboard, I think this is not the overall result. These are results of select pocket. So if you see the result season, right, we have close to 55, 57 results out for the Indian markets. Out of that, the revenue growth number is decent. EBIT growth is also there. Operating profit growth is visible, right? Profit growth uh, is much stronger. If you see within the pockets of gainers, right? So in two-wheeler industry, two out of three of them have shown positive revenue growth. Gems and jewelry industry again 40% growth. Industrial machine 35% growth. This is year-on-year revenue growth. Profit growth is again clearly visible. So there are a lot of companies which are getting huge benefit out of the expansionary environment that we are seeing in the markets. So financial services again there's a growth. IT and consulting there's a growth. This is Infosys which had mild. Let's actually go there and see what is happening. So this is HCL Tech, which has delivered 6.5% revenue growth. Uh, Negative profit growth is basically your in. Let us see which are these stocks. This is Vakrangi, so let's not go there. If you see Wipro has declared results, there's a contraction in their operating revenue. So and contraction in profits. If you see HCL, 6.5% growth in this environment where everyone is kind of worried. TCS, again, there's a revenue growth, there's a PAT growth. So Infosys has seen profit contraction, but TCS has seen expansion. So these are the guys who have the legs to take the move to next level. This is extremely positive as far as markets are concerned. Let's look at some other sector where the results have come in. Well, gems and jewelry is not a major sector or industry there's no harm in looking. These are very small companies, so there's no point in kind of looking at any of these. So there's a 5 to 7, 34 to 50, 22 to 36. So these are not very strong or solid companies to kind of waste your energy. There's no harm in looking at this kind of talk or this kind of story to understand and analyze what is happening there. But broadly, there's no point going there. So we are still in early days of Q3 results, but it seems like we are having a decent expansion as far as the operating revenue, as far as the revenues are concerned, and in some cases, operating margins also seem to be kind of supportive of overall market sentiment. Uh, so thank you so much for joining in once again. Let me give the standard disclaimer. I'm not a SEBI registered investment advisor. I have shown a couple of stocks, couple of charts. These are only for understanding the market and price action in the market. Uh, this is not an invitation to take a call or go buy and sell any of the stocks that we have discussed here. So please do your research and do contact your investment advisor uh, before taking any position in the market. Don't take this review session as a invitation to kind of, or this is not a solicitation for you to go buy and sell the market. So thank you so much everyone for joining in once again. I hope the content is of help. Thank you and have a great day.